Hi, hello. Yesterday we were discussing about Nifty. Yesterday we were slightly on the bearish side because we had seen a bearish engulfing pattern, and the bearish yesterday's closing was below the low of yesterday also. So we were a little apprehensive that this market might be forming a top because of price closing yesterday, bearish engulfing pattern. Along with that, there was a momentum divergence. We discussed bearish divergence on Nifty on the daily chart, suggesting a lack of strength on the upside. And now we also said that this is a short-term moving average, this orange line. If the market starts going below 18,200 to 250, we would expect further correction, and we witnessed a correction today clearly in the market. Now, how are we placed for tomorrow? Having this bearish outlook, how are we placed tomorrow? What should we do? Let's quickly take a look at higher time frames first and see what is going to happen. On the weekly chart, we are at a critical resistance, and the week is not over yet. 3 days into the week, we already see some kind of a bearish pattern, suggesting that 18,450, 460 should be a very strong resistance. Along with it, on a weekly chart, if you see RSI clearly, uh, a rally happens. This rally happens. RSI stopped at 60. Again, market rally happened this last couple of weeks, and there was again a resistance 60. So basically, RSI is struggling between 40 on the downside, 60 on the upside. 40 on the downside, 60 on the downside. This suggests the market is more or less on a higher time frame. It is basically a sideways market. Now we are hitting the resistance. So basically, when the markets are hovering between 40 and 60, this is what we do. We buy at the low and sell at the high. Buy at the low and try to sell at the high. This is what a higher time frame like weekly is telling us. So basically, sideways mode, and we are at a resistance. RSI resistance at 60, along with that price resistance around 18,500 levels. This is what weekly chart is telling us in terms of daily chart. So weekly is sideways, and at resistance. Daily was actually bullish. We were looking at higher highs and higher lows. Now, recently, what happened? Yesterday, there was a bearish engulfing pattern. That was the cause of our bearish view yesterday. And now it is closing below the low of the entire last 4 to 5 candles. So today closing is something significant because look at this candle, 1, 2, 3, 4, 5. So last 5 days low is here. So we are closing below the last 5 days low. That means whatever up move that was done in the last 5 days, by today's closing or today's low, we have almost negated that. That means we are slightly on the negative side as on daily chart. And we are closing below the short-term moving average. The fun with short-term moving average is whenever market usually comes below the short-term moving average, it usually tests a long-term moving average like this. So whenever a short-term moving average is broken from the upside like this, it usually tests the higher time frame or the higher moving average. So am I expecting this low to be tested, which is 17,900 levels? I think it's still far away. But before that, what will happen? We'll discuss what will happen. Let me go to hourly chart. So daily chart is bullish on a larger scale, but for the short term, we are looking at a short-term view for next 1 or 2 days. The short-term view has turned slightly bearish with the closing of today being low of last 5 days. Having said that, if I quickly take a look at hourly chart was finding support in the last couple of weeks. We have defended this longer term moving average. Today we managed to come below long term moving average. So once the long term moving average is broken, in the past, what has happened? So whenever a long term moving average price staying above long term moving average, if that is the scenario you see, once a long term moving average is broken, this will act as a resistance. This will act as a resistance here. So going by the same setup, this is called as change of polarity in our technicals. A line which has been a support, once broken, it starts becoming resistance. That means this should be a resistance for the next up move, which is around 18,300. In the last couple of days, I just told you that we broke the last 5 days low. So last 5 days low was here, support area. So basically, there's something called as change of polarity. So this was a resistance. Once resistance is broken, it turns into a support area. See this? The same resistance becomes a support area. Now this was a support, and now this support at 18,250 is broken. And now once the support is broken, it tends to act as a resistance. This is called as change of polarity in terms of technicals. So basically, technically, we are we are expecting for the market to find some resistance here. 18,250 levels. Why am I expecting resistance? Because of change of polarity. One thing. And if you are following me on a Telegram channel, I gave an update today, somewhere around 230 to 235. And the update was here. Extremely oversold on hourly charts. Last hourly candle is indecisive, suggesting lack of strength on selling side. For today, we have made a bottom 18,120 to 170 range is the range we are expecting. Once the range breaks, we expect further up move. And what happened then? This was sent around 230, 235, 236. So what happened after 230? If I go to 5-minute charts, 230 was somewhere here, right? So from here, we saw a good up move, a good 50-point up move we witnessed after the update. Why did I say this? So that comes from a different way of looking at a certain parameter from the options data. So the blue line that you see right now on the screen is called as a PCR. It's a modified PCR, not just an ordinary PCR. What was PCR telling me? If I just, how did I say that markets are making a bottom? There was a clear divergence in PCR. What do I mean by clear divergence in PCR? This is what it said. This is Nifty price. The thick blue line is the shade area is a Nifty price. So Nifty PCR right from morning, the PCR was bearish. You can see here it is falling. It is falling. PCR made a low. Price made a low. Price rally. PCR rally. When the market came down, price made a new low. Price made a new low. But PCR low in the morning around 11:30 was here. When the price made a new low, PCR did not make a new low, giving rise to a divergence. That means this sell-off that you're seeing in terms of price is not supported by an active build-up on the call side. So there was a clear divergence in PCR suggesting that this market is going to be a bottom. And that is where I said this market for the day, the low is made and we expect a further recovery and we saw recovery. So you have to use the tools properly. Along with that, given the bearish outlook, but today, tomorrow should not be immediate short because hourly is extremely oversold right now. RSI usually around 20, below 30 levels, it doesn't sustain. So you expect a further rally. So this rally, whatever rally that we're going to witness today or tomorrow, this rally should stop somewhere around 18,250 to 300 levels. So this should be the resistance now. So 250 becomes a resistance for the market. So market outlook on Nifty resistance is around 18,250 to 300 is the resistance. That is where I think I would initiate a short again for a very short duration, not a very long duration. What happened in terms of option data today? Today on the call side, there is about 266% increase in the call side, whereas put side only 24% increase. That means the call side is having a very, very high open interest build up on the call side. Where was the highest call open interest? 18,200. So this should be the resistance going into tomorrow. So any up move, we are expecting 250 trend to be acting as a resistance. So that resistance will be tested only and only if the market sustains above 18,200 in the morning. If market opens above 200, then there is a chances of some short covering at 200 call haters. So this would lead to 250 or 300 levels. So basically, 200 should be, if 200 holds tomorrow, expect 250 or 300 to be tested. If doesn't hold 200, that means today's low will be tested again. We expect 18,100 or 18,050 to be tested again. So in terms of overall options data, highest call open interest is still 18,400. Highest put open interest was 18,300 yesterday. Now we see a shift towards 18,000. And at 18,000, there is no unwinding. So 18,000, today we saw about 27 lakhs built up on the put side. That means 18,000 put traders are still intact. They have no move to unwind. That means 18,000 is most likely to stay for tomorrow's expiry. And we have 200 as immediate resistance. And if 200 is broken, we might expect 250 or 300 to be tested. So basically, this is what I am looking at. For tomorrow's action, I am expecting above 18,200. Expect some short covering to 18,250/300. And there I will exit my longs. I will exit my longs because overall scenario seems to be slightly bearish for a short-term scenario, right? So now if 200, if 18,200 is not broken tomorrow, I expect 18,100 and 18,050 to be tested on the downside. So 200 remains the key. So range for expiry, I'm expecting the range to be between 18,200 to 18,300. Some recovery usually happens tomorrow given the oversold conditions of lower time frames. This is the outlook for tomorrow. And if I have to speak about Bank Nifty also more or less the same scenario where we were expecting some kind of a topping formation. And Bank Nifty looks slightly positive or slightly better. We discussed yesterday also Bank Nifty is slightly stronger if you watch yesterday's video. And Bank Nifty is trading above the short-term moving average. So that means the short-term moving average is still not broken. Though the divergence is still intact, so we will not go longs whenever there's a divergence. We expect some sideways to correction. That is what happened today also. But Bank Nifty is slightly stronger because it is trading above or it took support at the short-term moving average. Slightly better. So Bank Nifty is relatively stronger compared to Nifty. Weekly chart, we are at resistance and RSI is around 60 resistance. So this is where we are struggling to break. And on hourly chart, if you take a look at hourly chart, hourly is still finding support around the long-term moving average. If you see Nifty has already broken the long-term moving average on a lower time frame like hourly chart, but Bank Nifty is still holding up. That means we are still intact. So this should be the support area for tomorrow. So Bank Nifty, some recovery, I expect some recovery tomorrow in the at least in the first 1 or 2 hours. So some recovery might be expected. So now how strong this recovery is what speaks about how we're going to plan our day on Bank Nifty. Nifty is clearly 18,200 is a make or break for us tomorrow. For Bank Nifty, this is where, so it took support from the previous support only. So 43,500 levels should be a very important support for tomorrow. On the upside, we are struggling to cross 44,000. We broke 44,000 only for a couple of hours and we came right back in. That means 44,000 is still intact. So 44,000 to 43,500 is a range bound market. So I am not either extremely bullish or bearish on Bank Nifty. I will hold a sideways view, and the view or the range is between 44,000 on the upside and downside we see 43,500. So Bank Nifty is relatively stronger. Why I'm saying relatively stronger is because it did not break on the daily. It held short-term moving average, and on hourly it held long-term moving average. So that means I still have to hold Bank Nifty for bullish to sideways view. So where is the resistance coming? The resistance is 44,000 and the support is 43,500. Why 43,500? That is where the bounce happened today. Along with that, if I take a look at the Bank Nifty options data, so what happened today on Bank Nifty? Definitely collating will be huge. So 120% increase in the call side, whereas put side only 31%. There is a huge amount of collating happening across strikes, 500 to 43,900. So whereas the highest rating happened today is 43,800. So this should be an interim resistance for tomorrow. First resistance is 43,800 based on the highest rating today. Support level, see 43,500, 600, there was no unwinding, still held. 43,500 is the highest put strike as on yesterday. Today also it remains same. Yesterday there was 36 lakh contracts at 43,500. Today it has increased to 50 lakhs. It means 43,500 put traders are still intact. They don't have any concern of markets breaking 43,500 as on date. Upside 44,000 was a resistance with 56 lakh contracts. Today 44,000 remains a resistance with 62 lakhs today. Right? So there was increase in the call side, there was increase in the put side. So Bank Nifty sideways to bullish 43,500 and 44,000 is a range. Unless until this range is broken, there is no firecrackers in the market. So sideways to bullish view on Bank Nifty. And what is the level? 44,000, sorry, otherwise 43,500 is a support and resistance is 44,000. Sideways to bullish view on Bank Nifty, slightly bearish view, but since oversold indicators are there on hourly chart, expect a recovery towards 18,300, provided 18,200 is broken. So 18,200 remains the key. For Bank Nifty, 43,800 is the key. If it breaks, expect 44 to be tested. Right? So I'm expecting some recovery, but this recovery should find resistance around 18,300 and 44,000 on Nifty and Bank Nifty respectively. Let's see what's going to happen tomorrow, and follow me, and you will get updates like this day in and day out. Thank you so much.